Welcome back to my YouTube channel where we talk about investing into the stock market. Um, this video is going to be a follow up to ticker MPX per subscriber request. Shout out to Baby Prince and welcome back. So, not too long ago, well, depending on how you define not too long ago, about 6 months ago, I did a video on Malibu Boats, ticker MBUU. In and that was per per a subscriber's request. Now, in the process of analyzing this company, we found a better proposition in a competitor, um, and and pretty much the pretty much transitions to this video as a follow up to that competitor, which is MPX. All right. So, with that being said, let's get into it. All right. So, let's go on the 6 month chart for MPX. As you can see, we got a decline here. We did the analysis. We found out about it. Found out about this company on October 2nd. Stock was about $14.16 then. Well, today it's $10.49. It's up a little after hours, as you can see right here. Um, so, quite a bit of a decline. It's about 29% decline ish in stock price. EPS, we're looking at 1.21. Um, PE is 8.58, and we got a dividend here which is yielding 5.34%. We're going to talk about some of these. We're going to talk about some of these metrics, but first, let's pull up my calculator here and let's see what the EPS is yielding on this thing, because we've seen a little bit of contraction on this stock. So if EPS is $1.21 and the stock price is $10.49, it looks like EPS is about 11% yield, or 11.5% yield. So that's yielding more than the stock market's been up more than 11%, but I mean, on a return basis, the EPS yield is a little bit appealing, or a bit appealing. I personally, when I go to value plays and when I try to enter in, I like to see the EPS yield over 10%. Growth plays are a little bit different, but this is one of the ratio metrics that I look at. How much is EPS yielding and so forth. All right. And of the EPS, which is $1.21, there's a dividend of 56 cents. So let's do some basic math. We'll subtract the dividend from the EPS, and what's left over is 65 cents a share. So let's take it a step further. I think that step further. So we'll look into the financials, but first, I listened to the earnings call for their last earnings, which was Q4 of last year, and pretty much looked at all the guidance. They paid out 19 million in dividends and so forth. But here's something that's interesting that's worth looking at. Let's go to the financials. We'll go to the balance sheet. All right. We'll look at quarterly. We looked at this company in June, so we're following up. Or I'm sorry, yeah. So we looked at this company in October. So the report for that was June numbers. Okay, when we were looking at the company. Since then, they've increased cash from 66.2 million to 72 million. All right. It says total cash and short-term investments. They probably got a bunch of bonds that's yielding to help their cash flow. All right. Let's go to cash flows. You see that there is a decline. There is almost a dramatic decline from June to December on their last report. I mean, their net income is this decline on net income is like from 14.3 million to 5.4 million. Words are hard today. So that's a pretty steep decline. So margins got hit. They're still operating cash flow positive, but look at this. Their free cash flows look fine. All right. Let's look at from an annualized basis. All right. So not too bad from a year over year comparison. December of 2022, they did 40 million in net income, and December of 23, they did 41 million. So net income did go up slightly. All right, let's look at free cash flows and what they're paying out in dividends. So they paid about 19 million in dividends right there, and for their free cash flows, they made 40 million. So there's enough cash coming into the business to sustain that dividend. All right, let's look at the valuation again. Market cap's trading at 363.82 million. Cash increase, but they added, from the last time we did the video, I recall there was no debt. They added about 300 grand of debt, which is very minuscule compared to near 72 million ish, right? That could be capital leases, some temporary notes or something. So that might be where this little debt is reflecting from. Now let's pull up this calculator once again. So 363 million. If you were buying this company right now, what would you really be paying from an organic level? All right. Let's just say we'll get their market cap that they're trading on. We'll subtract their cash. All right. You're paying about 292 million for the company. All right. So earnings. What are some things that I picked up from earnings? All right. I'm tracking that they are guiding that margins have capitulated. And what I mean by that is they believe that margins are at the bottom. There's no more contraction. Like it is capitulated. It's at the lowest point. So from here on out, margins are going to go up. All right. Now they are posturing. You see the increase of cash on the balance sheet and so forth. They are posturing for a merger and acquisition. They haven't decided or mentioned if they have a company in mind, but they are in the thought process of this macroeconomic environment being how it is. Some other boat sellers or other companies may decide to sell because the soft economy and boat sales. As you could see, let's go quarterly. As you can see, there was a decline in revenues here, near 30%. So, or over 30% decline in revenue sales. So the whole market or that whole industry is experiencing sales decline. But now recently they're saying that things are getting better. All right, ish, not really, but they're guiding stability in the sales and margins capitulation. So that's something to consider. Now, the last time I did this video, I did mention this macroeconomical environment with the interest rates, that they can see some declines. All right, and then they have. So, what is the value proposition of this stock? Well, according to management, they're going to continue to pay dividends all the way up to a point of acquisition. So if they decide not to do an acquisition, all the way up to the point thereof, they're going to continue to pay dividends. I'm under the impression that if they do a merger and acquisition, that dividend's getting cut based on the earnings call that I listened to. So typically with these type of stocks, the yield will attract income-based investors. So a lot of dividend investors will come in here. They'll buy the stock, just for the yield. A lot of that's the main thing. So it's a different class of shareholder base. So a majority of the shareholder base for MPX, a lot of it is going to be your dividend stock investors. Now, if they do a merger and acquisition and they cut this dividend, this stock price is going down. Stock's going down. All right. I wouldn't be surprised if the stock gets cut down 25 more percent. We can be seeing, I mean, let's look at some different levels. We can be seeing this thing go back down to $7, $8, in the support range right here from last or a couple years ago. All right. So that's my take on it. I mean, you're going to have to, I mean, if I was an investor wanting to come into this company, I think now's the time to, and this isn't financial advice, this is what I would do if I was looking at the boating industry and wanting to get involved and wanting to own this company. First of all, I would have to trust the management, the CEO, because they're, merger and acquisition, if they acquire a company or buy a company, that can dramatically hurt the stock, or it can dramatically help increase value. All right. So a lot of it depends on if they take on debt, how much they pay, etc. But if I buy into this stock, I'd probably start averaging in. I wouldn't go heavy, and I would just average in month by month, until I hit a certain level of, okay, I own enough stock where I'm comfortable. And I would probably, maybe I put a little more money aside just in case they do the acquisition of another company. So when the stock tanks, you have an opportunity to buy more. Now, I would look into the details of the acquisition. The debt, or if they're using debt or raising equity and so forth. According to the earnings call, they would be open at both. But according to the finances and how I see things, more of like, a little bit of speculation, but just being a numbers whisperer, I think that they probably go towards equity, cash, and but I mean, they're not afraid of debt, but I don't think that they necessarily want debt, not with these high interest rates, which is another thing to consider, because the whole market is thinking that the Fed is going to cut rates 3 times this year, maybe starting in June or something like that. I'm contrary to that belief. My analysis, I think rate cuts are coming. I think there will be one rate cut in Q4, by the Fed, and that's going to be the first rate cut to happen. So I think that there may be a little more pain to come. All right, as far as not just the boating industry, but a lot of other industries. So that's my take on it. Hope you got value out of the video. Um, things to consider. I got a Patreon up and running, so if you wanna if you wanna show support, link down in the description. I have exclusive content running on there and so forth. And if you found value into this video, consider subscribing to the YouTube channel. Thank you, and enjoy the rest of your weekend.